Hello and welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday the 5th of August. We've got the continuation today of this move that we've seen in the wake of Donald Trump announcing the trade tariffs are going to be put and increased on China. We've seen a significant move into safe haven plays. The yen continues to strengthen. 106, low 106s now. That was 109. Just this time on Friday. An incredible move, on Thursday I should say, an incredible move that we've seen in dollar yen in the last couple of sessions. We've also seen gold breaking out to multi-year highs above 1452. That was a significant break, and we really are seeing just a continuation of this negativity through equity markets. They're all still under pressure, and one of the key factors we're seeing is this Chinese yuan, which has now weakened below, or on this chart above 7, that key level that has been against the dollar that I can show you has never been seen before. Really key breakout on that, or key weakness that we've seen on the yuan, and it really does suggest that the Chinese currency is under pressure against the dollar, and that sort of has implications, I think, across the region. Really, just reflects the uncertainty, the ongoing economic negativity through the trade dispute, and I think it's going to continue to be a key component of why equity markets and forex majors remain in a very much of a risk negative vibe. You can see that through how markets are moving today. Interesting that the euro continues to hold up pretty well, actually. Back above 11 big figure, and it's now into a key area, I think, that I'll talk about in the chart analysis, but key area, I think, between 11 big figure and 12 big figure. Interestingly enough, also, cable continues to fall. Cable, or sterling, continues to fall and under pressure, seemingly as a higher risk currency, because you've got the commodity currencies all under pressure again, and sterling dollar continues to fall as well, as though it's playing out as a higher risk commodity currency. So interesting there. Obviously, Brexit remains a key drag on the UK economy. Now, it's interesting that we've had actually the PMI data out this morning for the UK. Did pretty well, 51.4, and that was actually the highest since October 2018 and beat estimates. So sterling actually ticked a bit higher on the back of that, but it's just lost some of that momentum initially from that data point. We had the services data, PMIs for the Eurozone, very, very slight downward revision, but to be honest, the composite data in line with the flash reading of 51.5. So again, subdued economic data out of the Eurozone, not looking all that great. And then we're looking out to the US data this afternoon, looking out for the ISM non-manufacturing, which is at 3 o'clock. And expected to improve slightly to 55.5. So how the US non-manufacturing PMI comes out this afternoon could have an impact on the dollar later, because the dollar has been sort of stuck in the middle between the safe haven plays such as the yen and the Swissy performing well versus the commodity currencies, the Aussie, the Kiwi and the Loonie performing badly, and the dollar has subsequently just been flying around on the back of that, but actually dollar index is lower, despite the fact that Chinese yuan, look at that, on the breakout. So this is all coming as bond yields continue to plummet. We're now down at 176 on the 10-year, and the 2-year as well, 163. So really is falling bond yields. It's difficult to really see the US dollar performing strongly in an environment such as that. Okay, so that takes me to my chart of the day, which is dollar Swiss. Now, again, this is sort of a reflection of what I was just talking about. The safe havens have done so well in the last few days. Dollar Swissy has turned back from a pivot around about 99.50 in the last few days, failed to close a breakout, and then closed decisively lower, breaking that uptrend, breaking the 98 big figure support, seemingly on a decisive basis today. But look at these momentum indicators. That RSI, the MACD line is crossing lower underneath neutral. The the stochastics accelerating lower, and the RSI back under 40. This is all suggesting that rallies are a chance to sell on dollar Swissy. 98 big figure becomes a basis of overhead supply now, resistance. Intraday rallies are a chance to sell, but certainly this decisive move below 98 figure has opened 96.90, and as I said, RSI 35. There is downside potential. RSI went down to 25 back in that late June sell-off. So I think a retest of that key reaction low 96.90 is likely in due course, and if the market were to break that, you're looking at 95.40. So it really is going to be a key few days, I think, for dollar yen. For dollar Swissy, and I think that we're still in this very much of a safe haven bias in these markets. So with that in mind, I wish you good luck in your trading. Click here to subscribe to my videos and go to our website where you can join up for our trading webinars. Thank you very much.